Scott Melker, what a pleasure. What an honor. Thank you so much for coming on the show.
Well, thank you so much for having me.
Yes. So I know a lot about you. I'm sure that some of our audience knows a lot about you as well. But for people who may not know who you are, can you talk a little bit about yourself and the work that you do?
Sure. I'm a crypto enthusiast first. And I think that that's where everything that I do sort of bridges from at this point. I got into the space in 2016
Hmm.
after actually a 20 year career DJing and producing music, but I was always interested in financial markets and trading. So I got into crypto as a trader first. And then I really became passionate about the use case and the importance of Bitcoin and other cryptocurrencies sort of later in my career as I went down the rabbit hole. Um, and for whatever reason, I think I had a solid following from my DJ and music years, and that built into a solid following in the crypto space, which allowed me the opportunity to have a sort of a bigger megaphone. And I started a newsletter and a podcast. I have a YouTube channel, and basically now I don't even have time to trade because I'm just making content and talking about Bitcoin all day, every day through any medium that I can find. Because at the end of the day, I believe it's so important, and I just want to see true mainstream adoption.
For sure. So why is Bitcoin adoption so important to you?
Well, I believe that people are actually starting to realize it on a more mass scale since COVID hit and we had the global economic meltdown and we saw stocks continue to go up while people on Main Street suffered. And I think that people are realizing what Bitcoiners have realized for a very long time, which is that it's impossible to store value in legacy systems. You can't obviously save dollars. Dollars are for spending, and hard assets like Bitcoin are for saving. If you save dollars, you're losing up to 15% of your buying power every single year.
Hmm.
So I think that people are starting to realize that you can't print money forever, that infinite quantitative easing is unsustainable, and that they need other options to protect their wealth. So I think that that's been the driver behind this sort of huge boom in the
Hmm.
last year. And I think that a lot of us were called crazy for saying this for a long time now are feeling a bit of vindication.
Yeah, so when you sort of joined this space in 2016, were you already seeing this narrative? Was the attraction of Bitcoin that it was a hard asset at that point, or was it something else
Nope.
that brought
I
you?
came to trade and make money, right? I was in it, and very frankly, I was in it for the dollars. It was this sort of mythical world of unicorn 100x trades and really this just crazy sort of casino, to be quite frank, it seemed like. So it took me a while after getting into it as a trader to realize what I was actually trading and the importance of it. And I think that that's really important for new people to actually dig in and understand what you're buying and not do what most of us did and sort of got lucky early, which is just speculate because you think the price will go up. That's, dangerous. And we've seen sort of the results of that of late, once again, after seeing it in 2017. So, I think that it's important to understand the underlying value of the asset and why you should be holding it for a really long time and not concerning yourself with what's happening with the price.
Yeah, absolutely. And I can totally relate to that. I also have a background in music and made my way into the crypto sphere first as a
Awesome.
trader and now as a journalist. That's so funny. But yeah, so let's talk a little bit about what's happening at this current moment. Speaking of all of the quantitative easing and the crazy action that we've seen in markets over the past year, it's brought a lot of new people into Bitcoin and
Hmm.
crypto, which is great for people like us who who like the cryptocurrency sphere. But last week we saw sort of a crazy market crash, a lot of maybe new buyers exiting the market. In your opinion, what happened there? What caused that big market crash?
Leverage happened.
Aha.
And I think that there's every indicator, on chain metric, exchange metric that you can find indicates that that's exactly what happened. Of course, there was a huge negative news cycle, but the negative news cycles always seem to kick in as the leverage gets rinsed out of the system. And I don't think generally that that's a coincidence. Not that I think there's a grand conspiracy theory. It's the same on the way up. You see euphoric news and headlines, and on the way down, everybody piles on and tries to kick the dead horse, so to speak. But it was leverage from 60,000 to $50,000 Bitcoin. We saw almost $10 billion in liquidations on exchanges, which is at the time was like 3 times more than any previous liquidations, I believe. And then from 40 to 30, we saw another almost 10 billion on that huge move before it bounced back up to around 40,000. Um, and that represented 800,000 separate traders liquidating their entire accounts. So that just tells you that This is a nascent market. There are huge players who have the ability very easily to move price once they start to trigger that leverage liquidation cascade, and that's what you see in this market, and why we have much more dramatic moves when it really goes down. Because if they're at 40,000 and they short it down to 39 and know that that'll start liquidating people, the liquidations at 39 send the price to 37, which liquidates the next round and sends price endlessly down.
Right, so it's like a domino effect, sort of.
Correct.
Yes. So, but
Cascade.
yeah, exactly. So we didn't, yeah, and I think you kind of hinted at this earlier. We didn't really hear a lot about that leverage effect in mainstream media. Like, I think most of the reporting about the crash was about this clampdown that is, you know, supposedly coming from China, about Tesla saying that they're no longer going to accept Bitcoin payments. And that was sort of the narrative, that these two events that are really bad for Bitcoin and for cryptocurrency in general. And that's what caused the crash to happen. Um, do you think that but at least I think from my perspective, the leverage was sort of left out of the conversation. Um, would you agree with that?
Yeah, leverage was left out of the conversation because it's the actual answer and they don't want you to have the actual answer. China has banned Bitcoin more times than I can remember, and I've only been here for 5 years.
Yeah.
And literally every time Bitcoin is dropping, there's some sort of China ban reported, right?
Yeah.
Even if it's like a repeat of something that was already stated 6 months ago or a year, or it's misconstrued, that's always there. As for Tesla, the story with Tesla was always that they invested in Bitcoin as a treasury asset,
Mm,
right?
mhm.
Which has not changed. Elon Musk openly, tweeted Tesla has diamond hands. They have not sold their Bitcoin except for that small fraction to pad their quarterly earnings, which made perfect sense. Um, and so the narrative that Tesla was going to accept Bitcoin for cars, to me, was a very small piece of the puzzle that was overblown when it was reversed. There might be 7 people on the entire planet dumb enough to sell a deflationary asset to buy a car that loses 30% of its value the minute you drive it off the lot.
Mhm.
So, and to add to that, if you're in the United States and you pay for a car with Bitcoin, you've sold your Bitcoin and have a taxable capital gain for the sale of that Bitcoin, and have just made the car up to 37% more expensive as well. So I think that that was a symbolic gesture.
Mhm.
And it's my opinion that Elon Musk probably was pressured from the EPA or someone, since his primary business right now is not really selling cars, it's selling energy credits. And
Mm.
anything that would be be optically poor for Tesla being an innovator in clean technology and a removal from fossil fuels. At least that's the rumors from somewhat credible sources. I think it's clear he's passionate about Bitcoin and cryptocurrency. He's made it very clear he believes that a future would be better with cryptocurrency than fiat currencies. So I think, again, it's a negative news cycle, and the people who have a ton of coins use that negative news to move the market, scare retail, cause that liquidation cascade. It's repeated over and over again. And let's not pretend it doesn't happen in normal markets, right?
Mhm.
Why
Right,
did
right.
GameStop go up? Leverage and a short squeeze, or a gamma squeeze, more technically, but because people were over leveraged shorting a company that probably should have been shorted. I mean, let's be real, it's
Mhm.
Blockbuster for video games, a decade too late. That company shouldn't be worth much, and they saw an opportunity and they did the same thing to the upside as we saw to the downside.
Right, exactly. So I want to ask you a little bit more about Elon Musk.
Please.
Because yeah, he has been a huge sort of controversial figure in crypto. It seems like for a while people were really like into him and very excited about the fact that he was into Dogecoin and Bitcoin. And then more and more we're seeing people who are sort of like, I think Michael Poppy said like, dude, just shut up, or like just stop tweeting at some point. Um, but it's not just Elon Musk. There are others in this field who sort of tweet and then the markets move, like it, and it happens almost instantaneously. As you mentioned, like this isn't just a thing that's specific to cryptocurrency. This happens in other markets as well. But uh in my sort of opinion, this has been happening more and more within the last, let's say, 2 to 3 years, particularly since the pandemic started and more people are online. What do you think about this whole phenomena? Is it dangerous? Is it par for the course? What are your thoughts?
It's the nature of social media and the way that
Mm,
the world is moving. And then you compound that with COVID and the Dave Portnoys of the world and people being bored at home with stimulus money and no sports to bet on. And you get a lot of interest in markets, right? So
mhm.
I think inevitably you get a lot of gamblers. I don't think most people that are doing it mean harm. I think they're just discovering it and learning alongside everyone else. Um, Before we even really had heavy social media impacting markets, we still had the Jim Cramers. I'm not saying in a bad way, but the Jim Cramers of the world with mad money who go on TV and
Yeah.
talk about a stock and the price moves. This is nothing new. It's just that more normal people are becoming influencers, I guess, in the trading space. Uh, at the end of the day, it's probably bad for the average individual to take financial advice from anybody that they don't know on the internet. But it's also their responsibility to understand what they're investing in and not just be blind. So I think that it's a two-sided coin, and you could make an argument for either. Um, Elon Musk is arguably one of the most powerful people on the entire planet. If he started tweeting about a stock 3 times a week, that stock would go absolutely nuts. And he was able to crash his own stock with tweets.
Oh my God,
Right.
yeah.
Again, not unique to crypto. And people, I think, at the end of the day, need to understand that markets are not a get rich quick scheme, and that they're responsible for doing their own research and making their own financial decisions.
Yeah. And you said that this is a two-sided coin. It's not necessarily a good thing or a bad thing. I wonder, like, we've seen, as you know, we've seen a lot of new retail investors enter crypto and enter, just sort of capital markets more generally. Do you think that social media influencers have played an important role in that entry and mobilizing these investors?
A hundred
And
percent.
yeah, and
I
like
think they
what?
are the reason. I think that they are the reason. And I think
Right.
it goes right. And again, this is not in a negative manner at all, but I think it goes right to Dave Portnoy, in my opinion.
Yeah.
When he became day trader Davey and started live streaming himself trading every single day, that's really when I think there was this powerful movement into
Mhm.
markets last year. And listen, like, people are going to get hurt when they enter markets and don't understand what they're doing, when they try to trade, and when they don't, have a 10-year timeline instead of a 10-minute timeline on their financial decisions. But I think the net is positive because he brought so much more awareness, no matter what he was doing. And you agree with it. We have so much more general awareness of financial markets in the last year than we ever had before. And I believe that that's going to help more people than it's going to hurt, especially when you consider that a lot of those people are millennials, probably didn't even understand investment accounts or saving or any of those things. And now they might go down that rabbit hole, even if they just started with Diamond Hands and GameStop.
Yeah. So what do you think, like, now that we have all these new traders that are in markets, what does this look like in 3 years and 5 years and even in 10 years? Like, how will capital markets be different in the future than they have been in the past based on the fact that we have all these new traders coming in?
Well, if GameStop is an indication and Wall Street bets, I think that hedge funds will slowly lose not their entire grasp, but that they will not be the sole, or that institutions, I should say, will not be the sole
Mm.
drivers of market activity in legacy markets. I think that retail will start to have more impact on what goes on as they understand the way that markets move and the way that they can impact stocks and trading. And I think just with the general rise of Bitcoin, which is very trader centric and has a very old and committed trading community, that will get more people sort of crossing back and forth between the markets. And I think we're seeing that already. Um, the GameStop saga triggered interest level in crypto that had never been seen before. Crypto
Mhm.
exchanges were seeing 10 times the signups a day than they were seeing previously because of Doge and because the same crowds were chasing those sort of moves. And listen, a lot of those people lose their money fast, but now they understand trading, or at
Mhm.
least, and they understand investing a bit more, and maybe they'll stick around for 40 or 50 years.
Yeah, no, that's pretty exciting in my opinion.
Me too. I agree.
Yeah, yeah. So I guess what I want to know is sort of how you see yourself in all of this. Like, as somebody who came from, not a financial background, but who is very active, very passionate about financial markets, about cryptocurrency. How do you try and sort of protect your followers from making bad decisions, especially people who might be new to this space?
It's a difficult balance. I mean, I
Mm,
think you can say not financial advice and do your own research and all of those things a million times. But if you have a couple 100,000 people following you and you post a chart or an idea that they don't quite understand, they might be compelled to act on it without knowing what they're doing. I think all you can do is try to be as reasonable and level headed as possible
mm,
and try to talk to people. I mean, I preach, listen, if you're going to trade, trade with less than 15% of your capital,
yeah.
invest the other 85%.
Mhm.
And so that can be your sort of gambling or casino money, but you should always be an investor first. I think ideas like that people need to know, the way that people have accumulated wealth over time is just to get money into something and don't touch it. It's really not that complicated. Anything you bought 30 years ago probably did pretty well, unless you happen to be in the tulip market or one of those sort of, unless you invested heavily in Beanie Babies. Um, but I think at the end of the day, it's very important that people understand that you should be an investor first.
If you had to give advice to somebody who's just entering this world for the first time, what would you say?
Crypto specifically, I would say do quite a bit of research, understand if Bitcoin is actually important to you, if you are looking for a way to store value, digital gold, because it's not something you're going to want to spend
Mm,
and use for the same reasons I sort of discussed with Tesla. It's just very hard in the United States with the tax code and everything to use Bitcoin on a daily basis.
mhm,
But if you're willing to be in it for the long term, if you think that central banks are bad actors, if you think that fiscal policy does not make sense, then I would say don't try to trade it. Just take what you have and dollar cost average in slowly. Don't worry about the price. Don't check a chart. Just buy it on Monday at 9 a.m. like you would with your IRA, and dollar
mm.
cost average and check it quarterly. And that's how
Just
people are
leave it.
supposed to invest. Just leave it.
Yeah. Yeah, very, very, very good advice. Not financial advice, of course. Um,
Never.
yeah, yeah, of course. So I want to ask you also about Ethereum. I know that you're a big ETH fan, and you gave us some great commentary on ETH and the Ethereum ecosystem, which thank you once again for that.
Sure.
Yeah. So, what do you think about the price drop in Ethereum that in Ether that happened last week? We've seen DeFi grow. We've seen the Ethereum ecosystem just exploding. So many new people coming in. So many new use cases coming in. At least to me, it was somewhat surprising that we saw Ethereum drop as far as it did last week. Of course, we've seen a recovery now, but why do you think was this also a case of leverage or was this something else?
I was gonna say, dare I say leverage?
Yeah, yeah.
I think that leverage is a huge part of it, and I think anyone who's been around a while knows if Bitcoin goes down hard, everything else goes down harder.
Mhm.
It's just sort of the nature of this market is that you have disproportionate upside when Bitcoin is sideways or slowly moving up, and you have disproportionate downside in Ethereum and other altcoins when
Mm,
Bitcoin makes a huge move. It's just the way it is. So,
yeah.
as you go from Bitcoin to Ethereum and down that sort of long tail of coins, you increase your risk all the way down and you also increase your potential reward. And you'll
Mm,
find coins down there that you could do 100 times on or go to zero, right? So it's more like leverage trading. So I think Ethereum was doing exceptionally well. So it
mm,
was had, the bigger you are, the harder you fall. And so since it was higher, it had sort of farther to fall to find support and a floor, and that's what happened. But as you touched on, it also bounced harder. When you see the
mhm.
market recover, it recovers a bit harder. So
Yeah, and do you think that that long tail effect that we see, like, some of these DeFi coins today, the prices were just, like, soaring, like, they regained all of their losses and then some. Do you think that that's a question of just having a shallower pool of investors, that the market caps are smaller and therefore more easy to move, or is it
sure.
something else?
Yeah, and I think that exactly speaks to the higher upside and higher downside, right?
Mm,
Because
yeah.
if you can move it up with a lower market cap, you can also lose that market cap very fast if those people panic and decide to leave. But I do think that we are seeing uh, coins and projects with legitimate use cases and
Mhm,
actual fundamentals, like total value locked, increasing, real money in these projects and real money locked into DeFi, billions and billions of dollars. And that's why they're going up. It's not just traders speculating like it was maybe in 2017. Um,
mm.
that said, there's thousands of these coins and most won't exist in 10 years. And that's just like,
Yeah.
much like the internet boom, a lot of companies try, a lot of companies fail. It's not a bad thing. It just means that most innovators won't make it. But the ones that fail still kick the ball further down the street and sort of help the ones that eventually make it. But I think that you can invest in the bigger protocols and not go too far down. And maybe, yeah, you don't have as much upside. Ethereum being a great example, actually,
Mm,
but your risk is reduced dramatically. But I
yeah.
really do see DeFi growing legitimately. This isn't just speculation.
Yeah, so what are you most excited about in the DeFi ecosystem?
I mean, just the opportunity for the unbanked and underbanked to have access to systems that they don't have access to now.
Mhm.
Most people in the world don't have access to a bank,
Yeah.
and DeFi is a bank on your phone. And not only is it a bank on your phone, it's a better bank because you can
Mm,
actually gain yield, right? You can park your money even without being like high risk. And even in the United States on platforms like Voyager or Nexo or Celsius or BlockFi, whatever, you can park your money, a USDC backed stablecoin, and make 10% a year,
yeah,
right?
it's pretty
Which
incredible.
is unheard of in a normal bank account. So even if you don't really touch crypto and you just buy a stable coin and use one of these platforms, oh, and then by the way, moving a stable coin from here to say Africa versus doing a wire transfer from Nigeria to New York,
Yeah.
vastly different and better experience. So I think that there's just an incredible potential for people to actually, once again, to store value, to get yield, to get their money out of these centralized systems, and to basically remove these third parties and toll collectors that are between all of our transactions and activities that don't need to be there.
Mhm, mhm. Do you think that the fact that some of these tokens are still so, let's say, basically all of these tokens are so volatile, does that have any effect on how the ecosystem is developing, or is it just sort of like extraneous to what's actually happening
I
at the
I
core?
think it might have an effect on how the ecosystem is perceived.
Mm,
If you're on Wall Street and you're used to checking the P&L and quarterly earnings report, and then you look at one of these and you're like, where's the value? What does it do? I think a lot of people still struggle with understanding it and why these coins have value, what their utility is. But no, I think that the volatility is just part of the game when you're in a nascent market and people are trying things. And I
mhm.
think we have some of the best entrepreneurs and innovators in the world now focusing on the DeFi space, and they're going to break things, and there's going to be mistakes, and there's going to be broken code, and there's going to be bad actors, and you know what, that happens everywhere in the world, and it will clean up, and the cream will rise to the top.
Yeah, and at what point do you think, you know, given the fact that we are in such a nascent stage of the DeFi life cycle, and that these products and services can help people who are unbanked, who don't have access to financial services, I think that you would agree that, like, at this point when there is a lot of broken code and exploits and those kinds of things, like, it's just we're not really at the point where people who are unbanked can rely on these services. What do you
I
think
think
about?
there are
Yeah.
services I do think there are services that they can rely on. I just,
Okay.
yet again, you get to DeFi, which is far down the risk curve from Bitcoin, and then it has its
Yeah.
own risk curve, right? And so you don't need to be in the one that's offering 1,000% APR and
Mm,
yield farming and lending to lending to lending. There are very, very stable platforms. There are incredible coins and projects that are being used all over the world. And listen, there are plenty of places in the world where Bitcoin is basically DeFi. If you go
mm,
to Venezuela and you have actual hyperinflation, people transact in Bitcoin and it's saving their lives and they're storing value. You don't necessarily need DeFi. So you can
yeah.
simplify this all the way down to just Bitcoin, right? And DeFi is sort of an offshoot of the things that Bitcoin doesn't do ideally. But Bitcoin is the most secure network, it's the best store of value. So every one of these gives up something of that for faster transactions or for less security. Um, but yeah, I think it is already mature enough that someone who understands it can use it and never face any of the major problems.
Yeah. I think that's a really good point. Yeah, that it's, not all DeFi platforms are created equal. There are some that are meant for these like super risky things, yield farming, et cetera. And there are some that are accessible and usable by people
Yeah.
who don't
Yeah.
necessarily have room for that much risk.
Yeah.
Absolutely. What are you sort of keeping your eye on at the moment in DeFi? What's exciting you? What interests you?
Uh, no specific coins that I would
Mm.
necessarily get into, but sort of what we touched on before, just the ability for people to gain yield and to park their dollar equivalent. Like, why would you ever hold a dollar if you can hold a USDC and gain yield and transact quickly with it?
Mhm.
But I think I'm just excited to see the entire space mature and see what
Mm.
comes of it. And then I should say, I love Ethereum, as you know, but
Yeah.
I'm anxiously awaiting the improvements that reduce gas fees and the switch to a more deflationary model and potentially to proof of stake from proof of work. So I think that the market itself in DeFi will largely go with the success of Ethereum's transition to a more usable, efficient, and sort of 2021 and not early 2010s, platform.
So, yeah, do you have any thoughts about the switch to ETH 2.0 is highly anticipated,
Years.
yeah, exactly, and we have all of these, developers in Ethereum. Ethereum has the largest community of developers, users, etcetera, but we also have other blockchains, Polkadot, Cosmos, Terra, maybe not Terra, excuse me, Conflux, many, many that are sort of saying like, "Hey, if Ethereum has high gas fees, like, come on over here. We've got, this other thing." What do you think about that? Do you think that these chains will ultimately coexist? Do you think that Ethereum is gonna eat everything after we transition to ETH 2.0?
I don't think it eats everything. I think ETH 2.0 is still really far away.
Mm,
I think that in an ideal world, they'll each find their specific use case that they're best for, and they'll run
mhm,
parallel. And then you'll have projects like Cosmos that you touched on
mhm,
that make them interoperable. And that's what's incredible about that one. So you'll have all these multiple chains, but you'll have really slick ways for them to interact and operate together and go cross chain. And then it won't matter if Ethereum eats them all. I think Ethereum will remain the biggest. And I think the notion of an Ethereum killer is probably unlikely, which we hear
mm.
about all the time. But I think all the chains you mentioned and more all have incredible, incredible use cases. And each one will probably find its lane. And then those lanes will run parallel and, we'll sort of have those highway interchanges with Cosmos and that'll be it.
If there's one thing that you hope that somebody who hears this conversation will walk away with, what is it?
Buy Bitcoin. And that and I know that seems so simple and cliche, but that's the way into all of this,
Mhm,
right? You buy some Bitcoin, then you understand what you're buying, or vice versa. Understand what you're buying, and then buy some Bitcoin, and then you see how it feels. You see
mm.
how the volatility feels. You see how it feels to hold something that stores your value, and then you start to explore further down that curve that we've talked about so many times, and where it works for you. And listen, there's parts of the world that's in the United States, right, where we all have bank accounts. It's very easy. If you're in Venezuela, you might not. Your path may be different, or if you're in Argentina or something. But I think just do your research and start to just get your money into the market like any other.
Yeah,
But I mean, really, first and foremost, buy Bitcoin.
awesome. Scott, I wanna thank you so much for your time. Before we go, can you tell our listeners where they can find more about you?
Sure, everything is kind of branches from my Twitter at Scott Melker, SCOTTMELKER on Twitter. And there you can find links to my YouTube and my podcast and newsletter and everything else I have going on.
Amazing. Thank you, Scott. Such a pleasure to speak with you.
Thank you so much.